Okay, good evening everybody. It is Tuesday, July 26, 2022. Big day on Wall Street, big week of earnings. Now, I apologize for not being live over the past couple of days. Work has just been crazy busy, but the good news is we are now back again live. Tonight, we will be talking about Microsoft reporting their quarterly earnings and also Alphabet or Google reporting their quarterly earnings. Obviously, as you guys know, as we've been talking about on the streams, most times when Microsoft, Alphabet, companies like that report earnings, we really want to focus in on that cloud computing growth. So for example, when we talk about Microsoft, we talk about their Azure cloud offering. When we talk about Google, we talk about Google Cloud. And then when Amazon reports earnings, obviously we want to do a deep dive into their AWS or Amazon Web Services offerings. Now, this earnings season wasn't all that bad, or as I should say, it isn't all that bad. Obviously, last week we had that horrible earnings report by Snapchat, which has led a lot of other, let's say, analysts on Wall Street to expect worse than expected earnings. More specifically, when we're talking about advertising revenue and advertising dollars. So even though Snapchat really dropped the ball and bombed earnings, we're going to talk about some of the, deceleration in advertising revenue when it relates to Alphabet or Google. Now, obviously, when we're talking about ad dollars, we want to talk about Google search. We're also going to talk about YouTube ad revenue. But before we do that, I want to just put things into a little bit of perspective and context here. Okay, so over the course of, I'd say, the last probably about half a year, we've been preparing for this, and we've been saying, look, companies are going to be going up against very difficult comps. Okay, so the terminology is comps or comparables. Because what did we see during 2020, right? The world was shut down, we had COVID, earnings were absolutely decimated across the board. Then we had a massive influx of stimulus, not only on the fiscal side of the house, through governments, but also on the monetary side of the house, through the Federal Reserve, central banks, flooding the system with liquidity, obviously creating for a massive economic boom. So for example, we saw, revenues grow 60 to 70% in some core segments. So as we move into this earnings season, it's going to be pretty hard to beat those already hugely inflated numbers. So as we go through the stream tonight, you're going to hear, YouTube advertising revenue only grew, I forget what it was, maybe like 5% or something like that. But we have to take into consideration just the massive amount of, I would even like to consider it a pull forward, right? We essentially just had a massive economic transition to fully digital within a matter of months due to COVID. So that really pulled forward a lot of that transition to the cloud, a lot of those advertising dollars transitioning from traditional core advertising to more digital advertising. But enough rambling, we'll talk about that tonight. But the two main topics of conversation is going to be Microsoft and Alphabet, obviously reporting earnings. We'll touch a little bit on Walmart. Obviously, Walmart reporting a pretty disappointing quarter. But if you guys have been listening to the streams, we've been talking about this for a while, right? We've been talking about how big box retailers or consumer discretionary companies or companies like Walmart may see some margin compression or further margin compression there. And I think that may lead us to a little bit of a rotation, maybe back to software names. And the only reason why I say that, if you look right now, I believe off the back of that miss. So off of that earnings miss, obviously Microsoft and Alphabet did miss earnings, but we're going to go into why I thought the report wasn't that bad. If you look at profit margins, right, look at gross margins when it relates to Microsoft or Alphabet and compare that to gross margins on Walmart or something like that, right? You can't even really compare the two. And this is why when we were talking about, when we covered in Miami our Tesla earnings report, the number one thing we were talking about are those very, very lucrative gross margins, right? So usually Tesla reports gross margin anywhere within the high 20s to low 30s of a percentage point in terms of gross margin. If you compare that to other automakers such as GM, Volkswagen, and the like, well, you're probably only going to get maybe a high single digit to low double digit number. So keep that in mind also as we're talking about software names, cybersecurity names. These names tend to have extremely, extremely high. We have Sally says, hey Tom, NMB045. So happy to see that you're back. Thank you so much, NMB045. Thank you so much for watching. Corey is here, says back in New York City. Yeah, so I landed in New York late last night. The flight was delayed, but it was only delayed like 30 minutes, so not that bad, everybody. Not that bad at all. Patricia Ivory says, hello Tom, good to see you, Patricia. Lemonade says, I made it, Tom. Hello, everybody in chat. Good to see you, Lemonade. Western Mass Dave says, good evening, all good people. Dave, what's up? So we're walking down Park Avenue tonight on East 56th Street. And we are obviously going to be talking about Microsoft and Alphabet earnings tonight. Gregory says, we are back. Yeah, Gregory, I had to take a couple of days off. I think it's like 5 days now we've been off. Joe says interest rates going up end of this week. Yeah, so Joe, I think you're talking about the FOMC meeting. I think you may be correct. You know, there was a lot of discussion, a lot of talk on previous streams, Joe, and I think you may have been the one that say this, I forget, but you know, what is the trajectory that the Federal Reserve is going to follow, right? So if anybody is on Twitter, if you want to follow me at Walks Wall Street, I sort of retweeted what Bill Ackman said. So I think Bill Ackman had a pretty interesting thesis about what the Fed may do, or I should say what they may or may not do, based upon investors' expectations of what other central banks are doing around the world. Okay, so if we take a step further, so what does that mean? Well, in Canada, we had a surprise 100 basis point rate hike. Okay, so if the Canadians are raising by a full percentage point or 100 basis points, you know, a lot of investors around the world think that, okay, if the United States, we just got a CPI print of about 9.1, 9.2%, I think it was 9.1%, why shouldn't Fed Chair Jerome Powell follow the Canadians' lead and raise a full percentage point or 100 basis points? Now, I think it's possible. But if I was a betting person myself, I think we're probably going to see a 75 basis point rate hike. I think we're probably going to see another 75 basis point rate hike. I think if we get anything less than that, the Fed will have solidified itself of having zero credibility. Hey, Austin City Limits says, hey Tom, glad you're back. Austin, thank you so much. Appreciate that. Roy S says, Tom, I noticed from your Twitter that Miami Airport was not that crowded. Yeah, it wasn't. And that's why I was pretty surprised when the flight was delayed. Although I was talking with somebody on Twitter, is this true? Usually flights after 7 p.m. are the flights that get delayed. Maybe that's true. But again, obviously, even if we've been hearing from, you know, Delta's earnings report, American Airlines earnings report, inflationary pressures and also staffing shortages is really what caused the crazy flight delays. Hey, the one and only Ruby Falcone, what's up? Ruby, good to see you. Welcome. Thank you for joining tonight. It's a beautiful night here in New York City. You know, the good news, everybody, is that this past week in New York, it was an absolute scorcher. So it's good timing that I actually came now, because a lot of the humidity has broken. A lot of the heat wave, I think, is come and gone. And it's actually kind of cool out today. Actually kind of cool out tonight. Austin City Limits is here. It will be 75 basis point hike for sure, not a full percentage point. Yeah, I mean, I guess we'll see. I guess we'll see. You know, if you guys, you know, check out what Bill Ackman posted on his Twitter and let me know what you think. I think it's a pretty good take. We have Sabrina Ferris here. Good to see you. Welcome. Ryan Royal says, hey Tom, mods, and everybody. New York City looking beautiful tonight. Good to see you, Ryan. So we are standing directly under the 432 Park Avenue building. Joe Hernandez says, I agree with you, Tom, on the 75 basis points. Jake Gann says, this is a little off topic, but have you seen wrestling and how they make good money? Wrestling? I just want to make sure you said wrestling. Let's see. Wrestling? No, I'm not sure. But if you're talking about like the WWE, I think that guy retired, didn't he? After he's like 77 years old. But you're probably not talking about that. I have not seen that. Hey, War Walker is here. Good to see you, War Walker. Always good to see you. Vinny Castellano says, Tommy, do you still like Zoom Info? Ticker symbol ZI. Yeah, I mean, I think it's a good company, but there's a difference between how the stock is acting and the company. And right now, a lot of those high beta names are really out of favor. So I don't have any position in it, but it's a fantastic company. Sabrina Fair, welcome, good to see you. C says maybe they shouldn't have fired for forced retirement. Good to see you, C. Sean Connolly says, what are your thoughts on having to live off $200K just to rent in Manhattan? Yeah, so Sean, I think that's a little bit, and we were talking about that before. I think it's a good question. I think it's a little misleading, right? So there was a New York Post article that came out saying that, in order to live in Manhattan, you need to make $200,000 because the average rent is like $5,000. We talked about this a little bit. I think it's a little bit misleading. And the only reason why I say that is because if you take a place like Manhattan, okay, we're on Park Avenue. This is a great example. In this building, if you look on Zillow, I think there's apartments in here that rent for like $80,000 a month. Okay, so Manhattan is an extremely, extremely diverse place where you can have something on 57th Street, Billionaires Row, that's renting for 80 grand a month. And then you could go to parts of Harlem, parts of Inwood, Hamilton Heights, Washington Heights, and get maybe a studio apartment for $1,600, right? So I just think that maybe that's a tad bit skewed there. But look, rents are out of control. Things are getting crazy. I don't disagree with you on that one. Chris L says, hey Tom, good night. Good to see you, Chris. Welcome. Hemp Lord is here. Says, finishing my walk, Tom. Good to see you. Arum Z says, Tom, Shopify laid off 10% of their workers. Wow. So speaking about layoffs, if we take a deep dive into Microsoft's earnings report tonight. So before I forget the Nightbot command, you guys know me. If it's one thing to, read the CNBC headlines and read the Bloomberg articles about these companies reporting earnings, but I think it's important for all serious investors to take it a step further. Actually go on the investor relations page and take a quick flip through their slide deck or their investor deck. So if you guys type !MSFT, which is the ticker symbol for Microsoft, so !MSFT, I actually dropped the link to the actual investor slide deck that was presented on the earnings conference call tonight. So if you guys want to check that out, scroll over to the page where they're talking about their impacts from Russia and Ukraine. Now, something there was pretty interesting to me that caught my eye. And obviously, we're going to talk about this tonight on the stream, but there was a couple things that really took a hit to Microsoft's earnings. Obviously, number one, because we've been projecting this for the latter half of 3 months now, is the currency fluctuations and currency exchange rates, right? So instability in the currency markets really impacted Microsoft, but not only Microsoft, pretty much every single company that has a customer base abroad, I should say. We saw this same thing happen with Tesla when we did a deep dive on Tesla's earnings reports, and the same thing happened with Alphabet. So I think it was almost $500 million impact to revenue, just based upon FX exchange rates alone. But another thing in terms of layoffs, when we're talking about Microsoft, I believe this was, maybe it wasn't a record, but it was up there. It was in the hundreds of millions of dollars for severance payouts. So I'm not sure what slide it was on. It may have been slide 7 on the deck. If you guys want to scroll over to slide 7, I believe, where Microsoft had to pay out hundreds of millions of dollars, or about $100 million, maybe a little bit more, for letting employees go, right? Layoffs. Obviously, you have to pay these people a severance, but they really chalked it up to organizational changes. But you guys know, we've been talking about this, and I think it's pretty obvious that almost every single company, not exclusive to tech, not exclusive to consumer discretionary, not exclusive to the big investment banks or finance, everybody's pretty much cutting headcount, right? If not all but hiring a little bit slower. So interesting that you mentioned the Shopify headcount cut. Hey, 48 is here. It says, evening, my friend Tom. Hope you're well. 48, we're doing good. It's a beautiful night out here on Park Avenue. We are standing on the corner of East 54th Street and Park. You know, not to get too off topic here, but that begs the question, did anybody see the verbiage coming out of the White House where essentially, you know, without saying it, right, this is essentially we are sort of trying to mind read here, but they're sort of telegraphing or preparing the American public that we're probably going to get a negative GDP print, right? And you can sort of tell when people are doing damage control. And this isn't really a knock on the administration at all, by the way. I actually put out a tweet saying, you know, when you try to redefine a recession just because you know you're going to get an unfavorable GDP print, you know, that's not doing anything for the American people. That's just sort of trying to window dress, for a lack of a better term, the economic environment based upon for your own political gain. And now that's not to say that I'm, you know, bagging on the Biden administration, but I think both Republicans and Democrats are guilty of that, right? Nobody will ever admit something's not going right under their current administration, because if they do that, you know, that sort of opens up that vulnerability for the other side to dunk on them, right? And I think that if we as Americans could sort of get away from this dunking culture where anytime the Republicans make a mistake or anytime the Democrats make a mistake, we say, see, we told you so, these guys suck, never vote for them again. Because if we continue down that path of that behavior, I think it's all but irrational behavior, if you ask me, nobody's ever going to address a problem. They'll only try to window dress the problem and put in deceitful practices to say, oh, even though we got 2 negative GDP prints in a row, the economy is still booming, everything's doing great, we're just going to change the definition. And it's not exclusive to the Democrats, the Republicans do it too in other ways. I just wanted to add that little thought in there. Hey, Chris Beeman is here, says hello Tom and everybody, missed you all. Chris, we missed you too, good to see you, Chris. Lemonade says New York seems so much more industrial than Miami, says Lemonade. Skylar Myers says, hey Tom, are they still doing the disco skating at Rockefeller Center? I went there a few weeks ago and they were doing a movie shoot there. Ooh, that's actually pretty interesting. You know, maybe we'll check that out tonight. I'm not sure. If I was a betting person, I'd say they probably are. NMB045 says, Tom, why is Wall Street Journal interested in Elon Musk's personal life? Yeah, so NMB045, I was a little bit disappointed in that article too. You know, I pay for the Wall Street Journal, just like many of you here, on a monthly subscription, and I don't pay for tabloid sort of stories, right? So essentially, for anybody who's not up to date on this, the Wall Street Journal essentially put out a hit piece on Elon Musk saying that he had an alleged affair with Sergey Brin, obviously founder of Google. But here's my take on it, and I posted this on Twitter. I actually don't care if it's true or not. It's irrelevant to me. You know, I sign up for the Wall Street Journal to get insights on business, not gossip tabloids. So that's something you would read in like the National Enquirer or something like that, or on E-News. It's just something I'm not interested in. So probably some hedge fund paid somebody to put out a hit piece, but at the end of the day, I was very surprised that Wall Street Journal ran a piece like that. That is definitely something you would see in a tabloid magazine, so very disappointed in them. So everybody, here we are outside of my favorite building ever in New York City, the Seagram building, absolutely beautiful. Hey, Mark Francis 076 is my division in an HMO company indicated to employees today that they swear nobody's getting laid off, but I think that may happen in 2023. Well, that's good news. I mean, that's good news, Mark. That's good news. Yeah, Western Mass Daves is good for you, Tom. It's gossip. Yeah, and again, you know, I think Elon Musk came out and said it's all BS, it's all fake news. But my sort of argument on Twitter was, I don't even care if it's fake news or not. That sort of stuff shouldn't be in the Wall Street Journal, let alone, you know, get it off the front page. I'd assume not many people read the Wall Street Journal to, you know, read about marital affairs and things like that. I mean, it's just, I'm pretty black and white with that. I just want to learn about the operations of the company, how the employees are feeling, any new innovations in products and services. I don't really want to be reading an article and wasting my time about who's dating who and who cheated on who. You know, if that stuff continues, I'll probably have to cancel the subscription. But we'll see. We'll give everybody another chance. Hey, Ryan Royal, good to see you. This is New York City Lights, giving me energy and waking me up through the screen. Love that. OF says, until Elon is out of Twitter deal, he has enemies. You know, that's actually a pretty good point, OF. He did cause quite a ruckus with the Twitter deal. You're right. Hey, Matthew P says, howdy, Tom. Good evening, old chap. Good to see you. So everybody, let's jump right into it, okay? So Microsoft reported earnings after the bell. Although they did miss on both the top and the bottom line, I actually didn't think it was that bad of a report, okay? Considering the economic uncertainty that we're living in, right? Between the Russia-Ukraine situation, between unbelievable movements in currency markets or foreign exchange markets, top all that off with a 9.1% CPI print. I think Microsoft reporting EPS of $2.23 versus the $2.29 expected isn't that bad. Isn't that bad? Revenue came in a little light too. Revenue came in a little light at $51.87 billion. Many analysts on Wall Street were expecting $52.44 billion. So revenue growth was up 12% year over year. That is the slowest revenue growth since the start of 2020. Earnings per share fell short of consensus estimates for the first time since 2016, with net income rising 2% to $16.74 billion. Now, let's unpack that a little bit. I want to take a step back and unpack that a little bit, okay? So, note what they said here. So, revenue growth was up 12% year over year, the slowest since 2020. Okay, well, what happened in 2020? We had the massive COVID crisis. What happened in 2021? We had an unbelievable boom year, really caused by two things. Okay, number one, unbelievable economic stimulus from the fiscal side of the house, so from governments, not only the US government, but governments around the world. And number two, from the monetary side of the house, from central banks printing money and the like. So this creates something that we really need to be cognizant as we are analyzing quarterly earnings, and that is the comps or the comparables. Hold on, I'll give you guys a quick view of the lobby of the Seagram building. It's one of my favorite buildings in New York. 375 Park Avenue is the address. So as I was saying, the thing we have to be cognizant of is to put things into perspective, okay, especially for these big tech companies, enterprise software companies that were a net benefit due to the recession. Due to the COVID pandemic. And here's what I mean by that. I'll try to explain it in the best way possible. So 2020, you essentially had the world shut down, quarterly earnings reports came in egregious. But what happened in 2021, there was an absolute boom in corporate earnings and corporate quarterly profits, especially when we talk about a company like Microsoft, especially when we talk about a company like Alphabet and all of the big, let's just call them FANG type of stocks, right? Because you've had a massive acceleration or a forced shift to the cloud. Now, we've been covering this. In my career, I sell a lot of these products, a lot of these cloud services, software as a service. So as companies were forced to build out an impromptu, decentralized, and distributed workforce, well, you need software tools to do that. You need a cloud hosting server to do that. You need Microsoft Azure. You need Google's Google Cloud, and you need Amazon AWS. So in my view, and we're sort of writing about this in the Behind the Street newsletter, is you had about 5 years of cloud growth and cloud transformation compacted into 3 quarters. Okay, so when we think about the big headline on CNBC that revenue growth was the slowest since 2020, well, we're comparing that to 2021 when everything was going freaking gangbusters. Okay, so not to be, a screaming optimist, and some people in the chat may say, hey, it was a horrible report. I think we have to take into consideration that revenue being up 12%, even after the massive explosion in growth we had in 2021 quarter, I think that's pretty good. I don't think it's Armageddon just yet. Michelle Henry is here. Good to see you, Michelle. Says, hey, Tom and everybody. Joan says, hello, Tom. Good to see you. Good to see you as well, Joan. We are actually standing outside of the KPMG building. We're walking down Park Avenue tonight. Beautiful night in New York. I'll show you guys the Blackstone building as well. I Revis is here. Says, hello, Tom. Good to see you, I Revis. Raul Rocco says, hello, everybody from Colombia. Good evening, everybody in Colombia. Dusty Cole says, I love to be a naive optimist, but they're non-editorial opinion pages of quality journalism. I'm talking about the Wall Street Journal there. Hey, Nicole is here. Good to see you, Nicole. Good evening to you. Hopefully you had a good day. American Dreamer says, Elon knows what he's doing. He exposed the bots. Yeah, so maybe, I think American Dreamer, I think that was his username here. Let me see. Yeah, so American Dreamer is essentially saying Elon knows what he's doing. He exposed the bots, so potentially opening to himself up to more hit pieces. It's possible. It's possible. Twitter claims that about 5% of the average daily users are bots. I think that's about it. Maybe about 5%. I don't really know too much about corporate law, everybody. So I've been getting a lot of questions about, do you think the deal is going to go through? Does the deal have to go through? And to give you my answer, I'm not sure. I'm not a corporate lawyer. I don't really know the intricacies of that. If you make an offer to buy something, is there a contractual basis to actually move forward with the deal? Maybe, but I can't really give you guys a good take on that because I'm not a corporate lawyer, and I don't really know too much about the legalese of that, just to be totally transparent. Yeah, American Dreamer says Twitter lies. You're probably right. We'll have to see. Wesh says, Tom, have you heard the news of Elon Musk wanting to fight Putin in a ring? I have not heard that. In Omandrum X says, I used to work there. The NFL also has an office there. Hey, very cool. Love that. Beautiful place to work. One of the things I noticed today, everybody, is that, I was actually working out of the WeWork office here at 430 Park. And this was probably one of the maybe 5 days that I've been in the city since the pandemic where it's really felt like everything was back 100%. Today, the city was absolutely on fire, which is good to see, which is very good to see. Manthony18 says, welcome back, Tom. Good to see you, Manthony. Thank you so much. D Wood, good to see you. OF says, Twitter made management decisions and maybe didn't provide all the data that he asked for. Marcelo Gill says, hey, Tom, hello from Sao Paulo. How are you? We're doing good. I'm doing good, Marcelo. Hopefully you are doing good as well. Microsoft reported earnings tonight as well as Alphabet, Google. So let's go into part two, and I think part two is more important. And you guys have heard me talk about this almost ad nauseum every time earnings season rolls around, but I think it's especially important this earnings season, and that is guidance, okay? As investors around the world, not only domestically here in the United States, but around the world have recessionary fears, you know, I think there was a report out of Credit Suisse, or it may have been Bank of America. I have to go back and look. I think I posted on my Twitter that institutional investors have the lowest equity allocation since 2008. Now, there's probably a couple reasons for this. I think obviously the biggest reason in the room, if you want to call it an elephant in the room, obviously that massive inverted yield curve usually predicts a recession. You know, I really want to get one of these electric scooters. The yield curve is massively inverted. We're probably going to get another negative GDP print, which will confirm that we are in a recession, in which case employers will start to make changes to lay off people, to not hire as many people, a potential for a lot of gross margins as we move through this earnings season could be compressed, so a lot of margin compression there. So I think that's probably why the equity allocation is at all-time lows, at least going back to the financial crisis in 2008. So the point I'm trying to make here is we really need to look at forward guidance. And Microsoft actually guided pretty well. So let's explore that. Let's explore that together on the stream. So guidance came in at 49.5 billion to 50.25 billion in fiscal Q1. Gross margin guidance is at 69.85%, wider than the 69.30% estimate projecting. So let's talk about two things here. Obviously, guidance came in actually pretty good. Maybe a little bit light on the revenue, but pretty much in line with analysts' expectations. Gross margins are actually expected to expand and come in wider than analysts' expectations, which is a huge surprise to me and probably many of you on this call as we've been talking about the threats of margin compression. Especially we saw that in Walmart's earnings report. We saw that with Target. And we actually saw that, I think it was Thursday, or last Thursday or Friday, I should say, when Tesla reported earnings, when their margins dipped from, I think, 30% to about 29%. So guidance was actually pretty good. So I don't think it's all doom and gloom and Armageddon right now. If these type of companies are continuing to post these numbers. Now, I do think, I know there's a lot of comments scrolling by asking me where I think the general market's going to go. I still think we make one more low. I think across the board in the major indices, if you think about the S&P 500, the Dow Jones Industrial Average, the NASDAQ, I think we make one more low across the board, and then I think that would be when the bottom is in. And I say that for technical reasons. So here's the main reasons why I say that, because I'm sort of briefly looking through the chat as of now. A lot of people are asking, you know, if you look at a lot of the COVID speculators, I call them, and we are overlooking the beautiful One Vanderbilt building here on Park Avenue, you'll see that there are still a lot of the buy the dipper crowd. So a lot of the, you could talk about the ARK innovation sort of funds, those ETFs. There's a lot of retail investors still buying in. So if you look at the fund flows, and I actually laid this out, I think about a month ago, in the Behind the Street newsletter, if we track the fund flows that go into these in May, so in May of 2022, the ARK Innovation ETF, ticker symbol ARKK, had a record amount of money inflowing to that ETF, which means people are still buying the dip. And if you think about a lot of the companies that make up that ETF, speculative, very low earnings, or no earnings, I should say, non-profitable companies. These are the type of companies that really flourish during times of quantitative easing, during artificially suppressed interest rates, when the economy is rocking on all cylinders, not when the Federal Reserve is in a hiking cycle, letting assets roll off the balance sheet and the like. So I think that the market has not bottomed yet for that reason. Also, if you look at the put to call ratio, usually if you look back at 2020, the COVID crash, if you look back at 2018, when we had that taper tantrum, in 2018, the stock market actually bottomed on Christmas Eve. You'll find that the put to call ratio went to Mars, right? And also the VIX went to Mars, which would be the CBOE volatility index. But for those two reasons, I do not think the market has bottomed just yet. Mike34 says that's the new JP Morgan Chase building. It is. Yeah, so to Mike's point, I think this is going to be the brand new JP Morgan Chase headquarters right here. So Jamie Dimon should be able to work right out of this building. Hey, Asmurray6 says, hey Tom, thank you for the walk. Thank you, Asmurray6. Appreciate it. Fredix is here. Good to see you. Ved says, is it worth doing a master's degree in finance? I mean, if you want to work on Wall Street, it depends on what you want to do, right? For me, I am a huge supporter of education. I'm a huge supporter of continuously in perpetuity learning, but I would not take out debt to do it. Usually, a lot of times actually, if you work on Wall Street or you get a job and you have a bachelor's, oftentimes employers, especially if you work at a large investment bank or a financial firm, they may actually provide you with tuition reimbursement dollars to pay for your education. Now, I'm not saying everybody does that, but there's a lot of people that do that. You know, to give you some context here, early on in my career, when I actually used to work for AT&T, they actually paid for a great deal of my education through tuition reimbursement. So I think you should take as much education as your means will allow, but you should really, really try to have your employer pay for that, have somebody else subsidize that, and not go into debt to do it. That would just be my take on that. But if your employer is going to give you tuition reimbursement funds to do it, I would say absolutely. I would say absolutely. Yeah, Gregory's like, it's getting taller. Yeah, every time we walk past this building, it seems like there's another couple stories on it. American Dreamers says Starbucks pays. You're absolutely right, they do pay. So I think Starbucks will do full tuition reimbursement, I think from the University of Phoenix, I believe, if I'm not mistaken. Mark Francis says, yes, tuition reimbursement is a thing with large Fortune 500 companies. Yeah, so I think you should really take advantage of that, right? If you can get a master's or an MBA, or even if you just want to take some courses, I mean, if your job is going to pay for it, you might as well. Hey, Dan Zhang says, hey Tom, good to see you back in New York. Dan, thank you so much. Appreciate it. You know, it's good timing, I think, Dan, because last week you guys were in an absolute, really just crazy temperatures. 100 degrees, if not more, with the humidity. Hey, Chris says, hey Tom, loving the content as usual. New York City looks great. Better than the winter here in Australia currently. Hey, Chris, thank you so much for joining. Much appreciated, much appreciated. Mike C says, Boeing used to pay for any class as long as it was an accredited institution. It could be a cooking class, doesn't matter. Well, I think that's a pretty good deal. I think that's a pretty good deal. Wendy England is here. Good to see you, Wendy. So everybody, check this out. This is right from the Microsoft investor slide deck. So for everybody who's joining, if you type !MSFT, which is the ticker symbol for Microsoft, I think this was on slide 3, but I can't really remember. But it says this quarter, the biggest challenge was worsening foreign exchange rates. This reduced revenue by $595 million. So think about that. So for foreign exchange rates, obviously due to the strengthening dollar, if we look at currencies across the world, mainly let's take into consideration that the US dollar is screaming higher. If we think about places like Japan, obviously with the Bank of Japan not budging on their negative interest rate policy, I think people around the world are starting to lose confidence in that native currency. So I think you're seeing a flight to safety to the US dollar, but that's actually not good for US companies that do business abroad. So in Microsoft's case, this quarter, the biggest challenge, so number one, was foreign exchange rates. This reduced revenue by $595 million. That's the top line. Okay, if we want to talk about the bottom line, EPS took a hit of about 4 cents. So about 4 cents per share on the EPS or earnings. Now, if we go back to the top when we were talking about maybe just 15 minutes ago, what Microsoft reported in terms of an EPS standpoint, it came in at about $2.23 versus the $2.29 that analysts expected. So it's very possible that if we weren't in this crazy inflationary environment, Microsoft would have probably either met earnings expectations on the EPS side, or if not, beat it altogether. But this is the first time since I believe 2016 that Microsoft missed on the EPS side of the house, as well as revenue. So this is East 46th Street, Vanderbilt Ave. We're going to take a quick look at the one and only Grand Central Station. Jonas here says, interesting. Mike C says, Boeing ended that practice in the mid-2000 decade. Hey, AT4 Nerd is here. Says, I'm a regulatory compliance manager for the NYSE. RN, my dream is Wall Street job. Hey, very cool. That's awesome, man. Regulatory compliance manager for the NYSE. That's fantastic. Very good job. Very interesting job. We definitely need regulatory compliance. So thank you for watching the stream. Thank you for being here. And hopefully your career path will lead you to whatever you want to do on the street. Hey, I see Charlie Richardson joining us. Hey, Charlie. Good to see you as always. Hopefully everybody had a good day at work today. AT4 Nerds is thanks, bro, one day. Somebody's talking about, oh, Sherry G. Hey, Sherry, what's up? Let's see what Sherry has to say. Sherry says, hey, Tom, you could take free classes online at Coursera for continuing education. I'm taking financials markets at Yale University. It's free, and anyone can take it. Yeah, so Sherry brings about a really good point, too. So there's tons of free courses online, free material online, where I think you could actually get like certifications and certificates too. So I'm all for that. I think that's a huge, huge value add there. You know, speaking of courses, I'm going to take the valuations course. So NYU Stern is finally offering, after many, many years of requests. I think I'm probably not the only one who has actually sent an email to NYU requesting that they turn Professor DeModeran's corporate finance and valuations course into an online offering. I'm probably not the only one who said that. But speaking about Yale, here we are at the Yale Club right here. So I will be taking the valuations course by Professor DeModeran online. Obviously, definitely do not have any time to go in person for class, but for those of you who are new to the stream or who don't know who Professor DeModeran is, he is a professor of securities analysis or valuation at the NYU Stern School of Business. He's really known for being the quote-unquote dean of valuation. So, you know, you don't really have to spend the money to take the course online. I think I am, just because, you know, I'm a huge, you know, finance and valuation junkie, Excel junkie. But if you guys want to have access to this information for free, if you just go to Professor DeModoran's YouTube channel, he actually posts the vast majority of his lesson material for free online. So if you don't want to pay the money, you don't have to. You can still get the value out of the course material by just sitting down at your computer and listening to a lot of his lectures for free on YouTube. So that is Professor DeModoran. Check it out. Hey, Lady O's here. What's up? Lady O is our moderator from New Jersey. Always a pleasure, Lady O. Hopefully you're doing good. Lemonade says Coursera is working with local libraries here in California for free online courses. It's pretty awesome. Yeah, so Coursera is good. If anybody is really into like computer science, CS stuff, you want to try to learn another coding language like Python or something like that, codeacademy.com is also a great resource for that too. So this is the front entrance of the One Vanderbilt building. One of my favorite buildings in the city. But really quick, everybody, because I think this is going to be a relatively short stream. We're probably going to go about an hour and a half, so I really want to run through a lot of the key criteria here that came out of the earnings report. Obviously, the number one thing, and you guys know I talk about this pretty much ad nauseum, anytime that Microsoft reports, anytime that Alphabet reports, or Amazon, there's three main things, or one main thing that we need to look for in all three of those earnings reports, and that is the cloud activity growth. So obviously, when we're talking about cloud in relation to Microsoft, we are talking about their Azure or their Microsoft Azure platform. When we're talking about Amazon, we are talking about their Amazon AWS offerings. And then last but not least, when we're talking about Google, we're talking about their Google Cloud offerings. Now, in relation to Microsoft, I don't believe they release their Azure data in a monetary way or in revenue growth. But if you think about overall, I believe it's their intelligent cloud offerings. So I think that includes things like their Azure public cloud for application hosting, also their SQL servers, Windows Server, and other services. I think it generated about $21.10 billion in revenue. That's up about 20% year over year. Now, Azure and other cloud services did grow by about 40%. This is versus 46% the prior quarter, but obviously Microsoft does not release the Azure revenue in dollars. But that's still pretty strong growth. You know, it's going to be interesting to see what Amazon reports in terms of their AWS growth, but those are pretty much the three, or the main, I guess, sort of criteria in that earnings report that I tend to look at whenever Amazon reports, Microsoft reports, or Google reports. So if we take this a step further, obviously you guys know I work in enterprise tech sales, right? So I am selling software or hardware into the Fortune 500, into the Fortune 50. So a lot of times we talk about, and we have many enterprise account executives that watch the streams, you want to look to sell a product that is addressing a massive TAM, okay? And TAM stands for total addressable market. So here's something that was really interesting, and I think if you flip to slide 8 on the investor deck. So once again, I actually provided the Microsoft investor deck for all of you that was presented today. If you type MSFT in the chat, the Nightbot will actually drop the link to the Microsoft investor slide deck. So here was an excerpt, I think coming from slide 8, I think. Now don't quote me on that, you can look through the slide deck yourself. But this is directly from the CEO of Microsoft, and I'll read it for you guys right now. And it goes, I quote, "We are seeing larger and longer term commitments and a record number of 100 million plus and $1 billion plus deals this quarter. in regards to Azure deals, right? So in relation to Microsoft Azure, the CEO of Microsoft says they are seeing a larger quantity and a longer term time commitment for those deals. So if you think about this from a career perspective, right? So a lot of times on the channel, on Walks on Wall Street, we will talk about, obviously from an investing standpoint, where we try to understand valuation a little bit better, but also for those people who aren't interested in that, we try to provide value in other ways, talking about, maybe you want to work in tech, maybe you want to work at some of these companies. What are some of the lucrative positions that you could actually go into and maybe apply to? So if you think about from a sales perspective, if you understand that the total addressable market for the transition to the cloud is absolutely just gargantuan, and Microsoft is literally telegraphing to everybody that deal size in the enterprise, in SLED, is showing unbelievable acceleration. Wouldn't that be a pretty smart move to maybe apply to be an enterprise account executive or a SLED, which is state and local government education account executive at those particular companies like Microsoft, like Amazon, selling Azure products, selling AWS cloud services? So these are just all things to think about, right? Because many people who watch the streams, you may be just graduating college, you may be just entering college, or you may be looking for a career change. And I think it's so critical to pay attention to corporate earnings, not only from an investment standpoint, but from a career standpoint, right? You want to work at a company that has extremely, extremely innovative products and services, that has a massive expanding total addressable market, and that has strong demand for those products and services. So if you just spend 20 minutes, flip through the investor deck of any company that you're interested in working at, assuming they're publicly traded, you're going to get a pretty good sense of, am I going to be successful in this role or not? Is the demand there? Is the market competition too strong? Is it not? So I think that's just a quick little, I guess you could consider it my 2 cents, is why I pay so close attention to these earnings reports. Hey, Brad's Brain is here. Good to see you, Brad. AT4 Nerds, as most people don't know how to find investor relations pages on the company website. 10Ks are also really great to read. Yeah, so AT4 Nerd is 100% right. Is 100% right. Many people, if they're applying for a company, or maybe they just don't even know how to find them. So if you want to look for all of those, like I know he mentioned, like the 10Ks, the 10Qs are also very good to read. All of that is completely free. If you go to sec.gov, you could type in the ticker symbol of choice, and you could read through those financial statements free of charge. But if you just Google Microsoft Investor Relations, Google Investor Relations, all this stuff is free. It just takes a little bit of legwork and some discipline to actually go through it, but I can guarantee you're going to get extreme value out of it. Alexander, good to see you. Welcome. But if you guys are enjoying the live stream tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams about 5 days a week between New York City and Miami, and talk about different topics in relation to the economy and finance. Hey, Savi is here. Good to see you, Savi. This is a very good evening to you, Tom. Savi, always a pleasure. Hopefully you're doing well in your neck of the woods. Brad's Brain, welcome. Ruby Falcone, appreciate the time check, 9:32. Nicholas Durr says, I've been taking pictures of the New Jersey skyline just outside of Manhattan. I think it is coming out beautiful. Let us know some of those pictures. Drop them in the Discord. Drop them in the Discord, please. Brad. Yeah, Wendy England is like, hone your sales skills. I agree with that. Hemp Lord says, I came for the walks and stayed for the talks. Appreciate it. Yuri Vick is here. Says, hey Tom, what do you think about quantum computing industry? Public with $1 billion market cap each and generate less than 10 million in revenue each. Let me hold on, Yuri. I'm just taking a screenshot of this. Quantum computers only solve math problems that businesses don't care about. What would happen with investors forever? Would they go bankrupt? So I'm definitely interested in quantum computing. I think Honeywell is making some great strides in relation to quantum computing. You know, I was reading an interesting piece, Yuri, and I think I may drop it in the Discord if you're not already a part of that. There was a really interesting Bloomberg article about quantum computing in relation to Bitcoin that I think you may be interested in. But really anything quantum computing, cloud computing, I am interested in because that is right in my wheelhouse. But in terms of from an investing standpoint, in full transparency, I usually tend to not look at things that's below 10 million ARR. I should say anything below $100 million in annual recurring revenue. I'm not saying that's because that's just me personally, right? I think the risk level definitely goes up when you're dealing with sub $1 billion market cap. These are like micro cap stocks. I think for me it's just a little bit too risky. You definitely can make a killing in it 100%, but I think for me personally, I don't think I have that expertise in order to be able to, I guess we'll cross the street, in order to be able to decipher who's going to be the winner in one particular industry or not. Many people are. I just don't think I'm smart enough to do that. Wendy England says, did I read that Elon sold all his Bitcoin? I think on the earnings report he sold about 75%, and there was some fake news circulating on CNBC, because you guys know we cover any main, let's say, mega cap company that reports earnings. We will cover it here on the stream, and usually I go through the financials and build my own financial models on the spreadsheets before the streams. And there was some fake news circulating on CNBC, which was it was pretty jaw-dropping. They would say that on CNBC, saying that Tesla, without the sales of their Bitcoin, would be cash flow negative, which is not true. But I don't think CNBC has since come out and said or made the correction, but that is not true. That is not true. Maybe they need to brush up on how to read financial statements. Hey, Ren1018, good to see you. Says, hey Tom, welcome back to New York City. Hey, Ren10. Thank you for the warm welcome, my friend. I appreciate it. We're standing on 42nd Street. We have a beautiful view of the Chrysler Building. Also, we have a beautiful view of One Vanderbilt. And if we go a little bit further down, you can see the Bank of America Tower. Hey, Mohammed says, regarding the centralization of cloud services and the rate of boarding to enterprises, if the ratio of revenue dependency to services increase more than risk is added if it passes a certain level. This is Mohammed. Gotham says there's a small park in Tudor City. LETR says, hey Tom, New York looks nice tonight. Thank you, LTTR. NG is here, says good night, Tom and friends. NG, good to see you, welcome. James says Tesla would have to mark down its Bitcoin holdings to market value anyway. Luce72 says, I just do land investments and have a Roth account. Very nice. Did anybody see that article? I think it was from the New York Times, raising warning signs that China is buying up so much U.S. farmland. Did anybody read that? Well, if you look a little bit deeper, I think the single person, if you want to just talk about a single entity or single person that owns U.S. farmland, I think that's Bill Gates. Am I wrong on that? Does anybody want to fact check that? I think if you look at the single largest holder of U.S. land or farmland, I think that is Bill Gates. In other news, really quick, Amazon and Apple are making their big pushes into healthcare. Now, Elizabeth Warren came out and said, and again, I'm going to paraphrase here, but she said that we should be very concerned that Amazon is making this big push into healthcare, which I actually disagree. Because if you read the statement as to why Amazon is going to be breaking into healthcare in the United States, it actually kind of makes sense, and I agree with it. Now, could they be gaslighting us? Maybe. But if you think about the incentivization structure for an entrepreneur, right, it is to make things more efficient, more affordable, while turning a profit, right? So innovative new products and services to the market to reduce costs, increase shareholder value, and provide customers with a good experience. So who better person to do that? Or let me rephrase that. What better two companies could you think of? If somebody came up to you with a survey and said, if there were two companies that you could assign, right, let's say if you were the president of the United States and you could assign two companies to work on fixing the healthcare issues that we have in America, I think I would probably say Apple and Amazon. I think those would be my main two choices. Loose 72 says Ted Turner also owns a lot of farmland. You were right on that. I forgot about that. Ted Turner was the largest landowner a while ago. I think you guys are right. It may be neck and neck with Ted Turner and Bill Gates. But I think you guys are right. I'm seeing a lot of Ted Turner. Daryl is here. Says, hey Tom, good evening from Chicago, Illinois. Wendy England says Bill Gates is the biggest private owner of U.S. farmland. Okay, so Ryan Royal says, hey Tom, Amazon is a brand people are uncomfortable with. If they can offer quality care at affordable prices and drive down prices with competition. Yeah, I mean, that's what I'm thinking, right? I think that, so Ryan, to your point, I think that a lot of politicians, not only on the left, by the way, on the right, has really demonized big, large entities like an Amazon and an Apple, right? And I think the main reason why they do this is actually a persuasion technique. For anybody who's in sales or anything, it's called, what is your rallying cry? And a lot of times, as a politician, what you can do is make these generalized, very lazy blanket statements to get a rise out of people where generally everybody can agree, right? So, the most famous ones that come to mind are, the billionaires are bad, right? So if you make these, essentially you have to scapegoat somebody for political gain and make very lazy blanket statements to try to get people to rally around you. It's one of the most basic persuasion techniques, just general lazy statements. But the bad thing is many people don't really read into the data, and they just say, oh, billionaire bad, jump up and down, clap their hands. Mark Francis 076 says, if you have seen one hospital system, you have seen one. Each system is unique. Some bill with DRG, some with revenue codes. Each one is very different. You're correct. So I'm a little bit familiar with that. And the reason is because my career has essentially been centered around selling into some of the largest hospitals, home healthcare agencies, nursing homes. So it is a huge nightmare, and I agree with you. Mark Francis, I agree with you. But anyway, didn't really want to go too deep into the weeds with that, but I just wanted to see what some of the feedback would be from the chat, because I think everybody is on the same page here that healthcare could be significantly improved, not only from a cost standpoint, but from a delivery standpoint, right? So I'm talking about access to care, quick, easy, efficient access to care. And if you think about any other industry besides healthcare, what is the one variable that has changed, that has made things more efficient, with easier access, and increased affordability? What is the one variable? It's been technology, by far. So wouldn't you want the two biggest tech powerhouses to attack this problem and compete? I think so. I think so. You know, if you want to drive down cost, and the main problem for me that I see in the American healthcare system is the access to it, right? So if you appoint these two large tech companies, which by the way, have access to some of the largest databases built up through wearables, through, you know, cell phones, I think those are the two entities to do it. Again, I could be wrong, but that's just my opinion, because anything throughout history that has been approved upon from an affordability standpoint, from a delivery standpoint, from a convenience standpoint, it's all been done through technology. Technology in and of itself is deflationary. So if you make healthcare technology, prices are bound to go down. Or I should say, tech-centric prices are bound to go down. OFs agree on access and fintech, but price transparency should be on that list too. Yeah, you're right. You're right. You know, OF, and for everybody in the chat, man, I'm drawing a blank on the company that Mark Cuban just bought. So maybe somebody in the chat could help me out here. So Mark Cuban just made an acquisition of a pharmaceutical company that works to lower prices of rare disease drugs, but not exclusive to rare disease drugs. Does anybody know what that company is called? I'm drawing a blank on it. But it's something similar that Mark Cuban is trying to attack that problem as well. Hey, Miguel says, Zuck has increased the price of the Oculus headset by $100 with no new features, blaming increasing prices. In the race to the metaverse, seems like prices are going up, says Miguel. Yeah, so Miguel, let me know your thoughts on that. Would you wear that thing? I mean, for me as of now, I think that obviously Mark Zuckerberg is making a big push to the metaverse, obviously changing the name to Meta. But it's very possible that could be a big mistake. I just don't see a vast majority or a large number of people, we'll go this way, I just don't see a large number of people wearing that thing on their head. Now, I understand that there's a difference between AR and VR, right? With sort of, you know, virtual reality being a more immersive world, augmented reality, you know, being something along the lines of like a Google Glass or something like that. I mean, I understand the distinction, but I just don't think that Oculus thing is going to work. Again, I could be wrong. I'm not Mark Zuckerberg. I don't have billions of dollars, but we'll see. MBA Elias, thank you for that. Yeah, so if anybody is interested in that drug company or wants to do some research on it, MBA Elias just dropped it in the chat, so thank you so much, MBA Elias. Appreciate it. Alexander says biotech is growing. Yeah, you're right. You know, so Alexander makes a good point. So let's touch on that for a bit, and then everybody, we got to get to Google's earnings. So for those of you who are just joining the stream, we just did a deep dive into Microsoft's earnings. Then we got sidetracked talking about the deep dive that Amazon and Apple are taking into healthcare, but I think it's a good conversation to have. Hey, MBA Elias says, you're welcome, Tom. Hope you had a good day. Hope you had a good day too. Hey, photos from around New York, what's up? It says VR requires you to be in that world environment. You can't look after peripherals. Yeah, so photos from around New York, I think I believe in augmented reality a little bit more than the virtual reality stuff. But then again, I just can't see people like wearing that headset and actually doing things. I don't know. Miguel says Oculus is clunky for sure, but the metaverse is coming, no doubt. It's just who can make the smallest headset at this point. Microsoft, Facebook, and Google all investing billions. Yeah, so Miguel Molina, I think you're right. You know, it's sort of like, so here's a quote that I like, not really a quote, but sort of a saying that I constantly have to remind myself. And I'm not sure who said it, but it goes along, something along the lines of, if you're the person right now that is saying the metaverse isn't going to work, if you're the person that's saying, you know, cloud computing is never going to work, fintech is never going to work, you know, you're essentially your parents in 1990 and 1995, right? So I think it allows you to keep a little bit more of an open mind. So I think you're right, Miguel. I think, you know, the metaverse is probably coming. It's just a matter of when. But, you know, to your point, it's who can make the, I guess you could say, the most convenient style headset. The most convenient style, because I just can't wear that thing on my head. You know, I think, you know, we were talking about this before, and I think this is when Daniel G was on. So Daniel G is one of our viewers from Buenos Aires, Argentina. And one of the things he said is like, look, for the metaverse to work, you're going to have a company that is very developer friendly. So you're going to need to have an environment where developers are going to want to build applications, tools, protocols for the metaverse. And I think that's why Zuckerberg came about with the name change. Who knows? Hey, D is here, says hey, good to see you. Welcome, D. So we're standing right outside of the Stephen Schwarzman building, the New York Public Library. Obviously, Stephen Schwarzman made the vast majority of his money on Wall Street via LBOs or leveraged buyout deals. So this is one of my favorite, I guess you could consider it a landmark, a New York icon, a staple. Photos from around New York says, hey Tom, augmented reality makes more sense. You can overlay message on eyeglasses or contacts, adverts or interactions, etc. Yeah, so photos from around New York, I agree with you. I wholeheartedly agree with photos from around New York because I'm actually doing some work with Google Glasses right now. We're actually working on some larger deals. One of the largest deals with Boeing actually got delayed for obvious reasons due to their malfunctions with some of their aircraft. But essentially, if you think about a tool like that, like a Google Glass, having the capability for real-time, you know, display in front of the person's frame of view or frame of reference, right? Augmented reality. You know, what are some of the use cases, like real use cases for that? Well, let's just explore one that, let's say, you know, a Boeing would use, may or may not use. I guess I could say they are using it. But if you think about aviation mechanics, there's actually a shortage of those aviation mechanics, with a record number of aviation mechanics retiring every year. So this causes a problem in one of two ways. So obviously, number one, you have a shortage of workers, but number two, it makes it very, very difficult to train and hire new people. Now, why is that? If you have an experienced workforce that is now retiring, it's going to make it very difficult for those experienced people to train the newbies. So here's what a lot of companies are doing. They could actually have a senior mechanic or a senior technician work longer, but they work from their house, and they're actually coaching the newbies step by step through the frame and through the lens of the Google Glasses or whatever sort of augmented reality tool that they choose to use, right? So think about that in relation to increasing productivity, in getting people trained faster, and also driving down the cost of training, that you don't have to have as many instructors there training the technicians, because you could do a lot of that virtually, right? You throw a Google Glass on a technician, an aviation mechanic, or whatever. You could really expand that across a multitude of industries. You talk about HVAC and the like, and you could have a senior technician coaching and training and really mentoring 10 students at a time, because they could see the classroom, they could see the tools that they're working on, they could see the parts that may be malfunctioning. So there I do see a use case. A lot of the other stuff, I think it's a little bit far-fetched, but me personally, being in enterprise tech sales, I've actually seen customers of very large Fortune 500 companies actually have an extreme increase in productivity and reduction in not only recruiting costs, but also a reduction in training costs as well for new hires. But I digress. Hey, CP is here. Good to see you, CP. Welcome. Hopefully you're well. Mike C says, I want that drummer to teach me through the VR. It's possible. He could actually probably make a pretty decent business, decent living doing that. So here we are standing right under the Bank of America Tower right here. Yeah, Dupa says Microsoft is already doing that with the Halo lens applied in manufacturing and medical field. Yeah, they are. They are. So I'm doing some work with Google Glasses for some of those applications, but you're totally right. Microsoft is doing that as well. Google is doing that. And there are real world use cases, but I think the use case is really going to apply to larger, well-capitalized Fortune 500 companies as opposed to smaller ones, but you're 100% right. Miguel says, think about this use case, a drone camera hovering over a building work site. A foreman is across the world and wants to see the progress made. He throws on a headset and is there virtually. Yeah, Miguel, it's a fantastic use case. That's actually probably like the best use case. Exploration, good to see you. Hey, Eyeglass Lady is here. Good to see you, Eyeglass Lady. So check out the color scheme on the Empire State Building tonight. Does anybody know why the Empire State Building is lit up this color? Pretty interesting though, looks beautiful. Hey, James says, Tom, let me tell you, doing medical stuff online is a true breakthrough. Not having to drive to appointments and sit in some waiting room is such a pleasure. Yeah, so James, I totally agree with you. So what James said is essentially backing up my point. Now, James, I'm not going to put words in your mouth, but this goes back to the point where I don't really want to pick on Elizabeth Warren, because that's, going to come across in the stream that I'm only picking on people that lean left. But there's trust me, there's Republicans that are ignorant too. But if you think about the two main problems in healthcare today, in America, in my view, it's the access to healthcare, so the way we apply healthcare, and the cost. Obviously, those are probably the main two things. I think we would all agree. So to James's point, what allowed James to receive healthcare virtually? What is that main variable that we were talking about earlier in the stream? Well, that's technology, right? Quite literally, through telehealth, through remote patient monitoring and the like, that is what is allowing people like James and myself to receive healthcare virtually, not having to go to a doctor's appointment, literally sitting in the waiting room. It's like a petri dish of just breathing disease and viruses. Companies like Apple and Amazon and other tech companies literally have the infrastructure, have the engineers, have the entrepreneurs, and have the forward-thinking employee base to really pull something off like this, right? And that's why I make the argument that, Elizabeth Warren came out with the tweet that says every American should be extremely afraid that Amazon and Apple are making such a big push into healthcare. Well, I think the opposite. I think that everybody should be really relieved, right? The two, arguably, right, greatest companies in America that produce the best technology are saying, hey, we think that we could solve this problem. I think that's fantastic news. Now, again, room for debate, but I actually interpret that as fantastic news. But I digress. Yeah, and so James makes another good point. I think it's more beneficial to people who don't live in a big city, right? Let's say if you live in a rural area and you have to drive, let's say 40 miles to your nearest doctor's office, right? That is telemedicine, remote patient monitoring, RPM is all going to benefit those folks obviously a lot more. So great comment there. Bit of wander, says Matt, to corporate healthcare. No, Ryan Royal says, love Bryant Park. Good to see you. I saw a horrible accident on 34th Street with one of these electric Tesla taxis. It was horrible. I think this was about 3 months ago. Now, if you Google it, I think what happened is a UPS driver lost control of the car, swerved into another lane, and took out one of those Teslas. I'm not sure if it was on autopilot or not, but really crazy accident. Rusty Golfer says, I have several doctor friends who are not fans of Teladoc. Yeah, well, Teladoc is one company, right? So Teladoc, I think it's publicly traded, ticker symbol TODC. It is just one sort of platform for telehealth, right? There's tons of other platforms for telehealth that are probably a little bit better. I think the biggest issue, and I don't really want to hammer on healthcare, I think right now the biggest hurdle, I shouldn't say the biggest issue, with telehealth is a lot of people want to see their sole primary care physician, and a lot of people are just seeing random doctors that really don't know them too well. So a lot of times there's a little bit of a disconnect there, but I think that'll work itself out. Sherry G, good to see you. The one and only Cindy Foley is here. Welcome, Cindy. Zabatata says, hey Tom, Warren is right. Big tech has the resources, but also has the incentive to monopolize and exploit. Yes, she is a leftist, but given the past, she has a point. Zabatata, I respectfully disagree, but I respect it. I respect that opinion. I respect that viewpoint. So I disagree with that, but I do respect it. I do respect it. Mike C says, many times the physician's assistant provides better health care than a full doctor. Interesting. All right, everybody, let's move on to Alphabet. So obviously, aside from Microsoft, we did have Alphabet or Google reporting earnings after the bell today. If you want to see the first half of the stream, or the first roughly, I'd say 45 minutes of the stream, we were doing a deep dive into Microsoft. Just a quick recap, they did miss on both the top and the bottom line, but it wasn't that bad of a report. Wasn't that bad of a report for reasons discussed previously, but if we talk about Alphabet, Wall Street expectations was about $1.28 a share. Google missed on the bottom line a little bit, coming in at $1.21. Now, you guys may be thinking, whoa, $1? That sounds pretty strange. Just two earnings reports on the streams, we were covering at $22 of EPS. Well, Google actually went through a stock split. Okay, so a lot of these numbers, especially, when we're talking about EPS or earnings per share, we're not going to be reading off those big numbers anymore of $25 worth of EPS, because Google or Alphabet did go through a stock split. So now there are more shares on the open market, not to be confused with the change in valuation, right? Not to be confused with the change in valuation, because anytime a company does undergo a particular split, there is no change in valuation, there is no change in underlying business mechanics. It's just more shares on the open marketplace. So if anybody owns or is an owner of Alphabet or Google, you'll see your same account balances there, but you'll probably just have more shares of that particular stock in there. So just please be cognizant of that. So if we talk about the revenue side, revenue came in at $69 billion versus about $69.9 billion that analysts expected. So interesting that Microsoft and Alphabet missing on both the top and the bottom line. But obviously, if we dig a little bit deeper into the reports, this actually wasn't that bad. Currency exchange or foreign exchange rates was also another hindrance to Alphabet, not exclusive to Microsoft, and also not exclusive to Tesla. So foreign exchange rates accounted for about a 3.7 percentage points off of revenue growth. So I'll say that one more time. Currency fluctuations knocked about 3.7 percentage points off of revenue growth. And if we want to talk about Microsoft, I believe they had about a $500 million impact to their top line just based on currency fluctuations alone. Obviously, if you have any multinational company based in the United States selling abroad, and you have a strong US dollar, obviously when you go to convert that foreign currency back to US dollars, you're obviously going to get a lot less US dollars than what we had originally. Yeah, I'm seeing a lot of stuff in the chat about this. Is actually pretty interesting. So UK and Central America healthcare. Yeah, so I'm seeing some chats about emergency room visits. Oh my God. So I'll tell you guys a quick story. We'll quickly divert off of what the topic is. So one of my friends in college, obviously we were playing college soccer at the time. So all of the insurance, the school is responsible for that. So let's just say there was an accident at one of the games, and he had to be taken in an ambulance to the emergency room. They literally did nothing, but he managed to get his hand on the bill, and it was over $16,000 just for him to get transported in an ambulance from, I was about to say Rikers Island, from Randall's Island to the hospital. And they gave him like some just basic IV drips of just to get him hydrated. But yeah, insane. Talk about ridiculous. So everybody, check this out. This is a beautiful view of the Empire State Building here. I'm not sure the reason why for the color scheme, but I'm liking it. I'm liking it. Yeah, James says, yes, emergency room costs are outrageous. Yeah, anytime you're talking about an emergency room visit in the United States, or if you have to be taken away in an ambulance, forget about it. It's done, game over, lights out. But thankfully, you know, the school, and I think this is across the board. I think if you're playing collegiate sports, I think the institution provides you with the health care. So obviously, lucky for him, he didn't have to pay for any of that. Hey, Joan, appreciate it. Thank you so much. So last week we had a really, really big blunder of an earnings report, and that was Snapchat. And off that news alone, I think Microsoft, I think Alphabet was down about 3 or 4%, just based on the news of Snapchat reporting horrible, horrible quarter. Now, why is that important to take into consideration when we're talking about a possible recession in the United States? Why is Snapchat a potentially good leading indicator for the US economy as a whole? Well, if we want to talk about tech stocks specifically, if we want to talk about, let's say, an Alphabet where a lot of their revenue comes from YouTube advertising, from search advertising, and if Snapchat is reporting deceleration and a major drop-off in advertising revenue, well, what is that signaling to the marketplace? Usually during times of an economic slowdown, or in general, a lot of companies will pull back on their advertising spending, and it sort of rolls downhill, right? It's sort of like a compounding effect. So just based upon that news, a lot of analysts on the street were saying, hey, Snapchat reported a horrible quarter. They reported extreme deceleration in advertising revenue. We think that Alphabet or Google is also going to bomb and show the same exact thing in relation to advertising revenue. Well, advertising revenue actually increased 12% to $56.3 billion. However, the most notable deceleration was in YouTube, showing only 5% growth after 84% the same quarter last year. Now, again, not to sound like I'm repeating myself, but if we go back to the beginning of the stream, what did I say we have to take into consideration, right? It's something on Wall Street that's called comps or comparables. Okay, so the main CNBC headline was the most notable deceleration was in YouTube, showing only 5% growth versus 84% growth the same quarter last year. Well, we have to take into consideration what happened the same quarter last year. Well, in 2020, earnings fell off a cliff because of COVID. Then we had massive capital injections, massive stimulus from the monetary side of the house, from the fiscal side of the house. Everybody was essentially forced to stay inside pretty much in perpetuity until about the latter half of 2021. So obviously, YouTube advertising revenue was up 84% in this quarter last year in 2021, because what was everybody doing? Everybody was inside, everybody was watching YouTube on TV, hunkering down, ordering products off of Amazon. Thus, advertising dollars exploded on the YouTube platform, right? Advertising dollars are going to follow where the audience is. So knowing everybody is staying at home, they're consuming Netflix, they're consuming YouTube, they're ordering things in off of Amazon, you essentially had like a 5-year pull forward in advertising spending, because you literally had the entire United States in front of a screen at the same time. So considering that, 5% growth versus those ridiculous comps is actually not too bad, right? And again, many of you on the stream may be saying, oh, here comes Tom again with the just blinded optimism. But I mean, think about that for a second. That's actually we may be buffering a teeny bit as I am getting a call. But anyway, I digress. I don't think those numbers were that bad. So check out the Empire State Building from this angle. Austin City Limits is hey Tom, what do you think about Walmart's comments about low earnings in the near future? Yeah, I mean, that was another bad thing, right? So Walmart's earnings, unfortunately I wasn't able to cover that. I wasn't able to cover Walmart's earnings report because I was working myself, but that was pretty troubling, right? We talk about the margin compression and we talk about the US consumer as a whole, right? So consumer optimism is at an all-time low. If you look at the University of Michigan Consumer Sentiment Index, that's really falling off a cliff. So I think on the earnings report, it pretty much translates rather well, right? Lower sales, lower demand, a decreasing appetite for the consumer. I think it's just starting to show its head right now. So obviously the guidance was not good at Walmart. So a lot of the big box, so think about this. So Austin City Limits, think about this. This is interesting. So I was talking with my friend about this the other day, and he says if Walmart is showing lessening or decelerating demand, what is that going to look like for a lot of these consumer discretionary type companies that are going to be reporting earnings, right? Because I think it's safe to say people go to Walmart just to buy generic things, right? I think the majority of people, you go to Walmart, maybe a little less so on Target, but you go to Walmart, you buy food, you buy milk, you buy eggs, maybe you buy some toiletries for the house, just everyday stuff. It's not like you're buying luxuries, right? So if the consumer, the average consumer, is letting up on average everyday purchases, what do we think those results are going to look like? It may be the more luxury market, it may be, the autos and things like that. So my friend's thesis is that those earnings are going to really tank and fall off a cliff, but here's where I may take the other side of the trade on that, maybe. Because if you think about it and you look at the data, the wealthiest of Americans have never done better than they're doing right now. And the reason why I say this is because, just as of one piece of anecdotal data, if we take a look at Tesla's earnings report, it actually came out pretty well. And if you look at the average household income for a person that buys a Tesla, it's roughly about $115,000 to $150,000 a year, I think. So potentially those luxury markets may hold up decently well, taking the other side of the argument there, but maybe he has a point. If you're seeing basic consumer staples or basic big box retailer stores having a little bit of a blunder on earnings and guiding lower, what's gonna happen for more discretionary stuff? Hey, sunshine after rain is here. Good to see you, sunshine. Welcome. Yeah, so we're standing in Koreatown here, everybody. This is 32nd Street, Korea Way, on the corner of Broadway. Beautiful shot here. Yeah, Mike Cease is like a place like Pottery Barn. Won't do well in a recession. Yeah, a lot of those places, what are those, like the very luxurious furniture places? I think you're right. Don Smith's is Tampa Bay, and Brady signed Julio Jones. Very cool. Christian Wilson says Walmart and USPS need to change leadership drastically. Bad culture is hard to change. It's Christian Wilson. Iris is 2-year waiting list. Yeah, I mean, a lot of demand. Kirby says you can walk off a lot with 60K. Hold on, let me go to Kirby's comment. With a 60K car with little to no savings, interest in addition stream. Interesting, Kirby. I don't know about that, but maybe you're right. Yeah, so I'm seeing a lot of comments about competition maybe increasing. Well, I mean, which I think is actually good for the average American consumer, right? I think you want an increase in competition, right? If Tesla's essentially the only game in town, what is that going to mean? Then essentially they could charge whatever they want. But that's the point of free markets, right? That's the point of capitalism, is to have multiple competitors competing for a seat at the table. And one of the things that a lot of people compete upon is price, right? Consumers want the best possible product at the lowest possible price or the lowest possible cost. So this is Koreatown, 32nd Street and Korea Way. Very lively for a Tuesday night. So if you look directly across the street, this is Grace Street, one of the best Korean bakeries in Koreatown. NMB 045's lack of competition is what led to the Rogers outage here in Canada, in my opinion. Wow, so NMB 045, you think? NMB 045, I'm not sure if I told you this, but I'm actually in talks. I'm trying to actually ink a deal with Rogers to get access to some of their network usage for an IoT platform. Because here's the strange thing. Obviously, if you're running an IoT company, or let's say if you have, you could be running like a basic vending machine company, right? But in order to operate your POS systems or point of sale systems, you need some sort of data connectivity. So a lot of the times, if you guys, I know this is off topic, but a lot of times if you buy something out of a vending machine or get money out of an ATM, make sure you look at the top of that vending machine or the ATM. Chances are you'll see antennas, like a wireless antenna. That is actually connected to a router or a modem. It could be like a Cat6 router. And 9 times out of 10, there's probably a SIM card in there. And that is pulling data from either one of the largest carriers, or it's on like an IoT platform that white labels data from multiple carriers, right? So if you have 50,000 vending machines out in the field, and let's say if AT&T or Verizon doesn't work in 20% of the locations, well, you could just put an IoT smart SIM in there that will automatically do carrier aggregation and find the strongest network. So we're dealing with a customer right now that does a ton of business in Canada, and instead of dealing with Rogers Direct, they could deal through, a pure play IoT company where they white label that data. If that makes sense. So this is one of my favorite views of the Empire State Building, right here on the corner of 32nd Street and 5th. One of my favorite views. I'd say this is probably about a 9.7, maybe a 9.7 view I'm going to give it. But if you guys are enjoying the stream tonight, feel free to leave a like on the video and subscribe to the channel if you are new. We do these live streams about 5 days per week between New York City and Miami. Hey, Bagels and Walks is here. Says, hey Tom, welcome back. Thank you, Bagels and Walks. Appreciate that very much. Yeah, so I flew in, I got into JFK last night. I think it was around 11:30. So my flight, obviously, par for the course, was delayed again, but only about 30 minutes. So it really wasn't that bad of a delay in all honesty, but we were delayed about 30 minutes coming into JFK. So let's cross the street and head a little bit uptown, because I do have to catch something soon. Hey, Melissa 2087 says, what is that Love place? So Love is a pretty decent Korean barbecue spot. However, Melissa, there is a better Korean barbecue spot right next to Love. It's called Baekjung. It's a little bit better, but those are probably the 2 best Korean barbecue locations in the city, in my view. But good to see you. Mike says, glad to hear Tom. Says he's still planning on broadcasting 5 days a week. Yeah, so we took about a 5-day hiatus, right? I mean, I think we took, how long has it been since the last stream? I think it's been about 5 days. But yeah, we should be back to regular scheduled programming about 5 days a week. Just been pretty busy, pretty busy. But we will be back to our regular scheduled programming pretty soon. Hey, Yogi says, hey Tom, what do you think about Walmart having mean discounts in the 4th quarter on consumer goods? Yeah, so Yogi, so I'll give you guys a little bit of an inside scoop. It's not really an inside scoop, but one of my friends good friend of mine, he does a lot of, you could say, like private equity, venture type investing. And one of the companies that he's consulting with right now are third-party distributors or third-party companies that actually essentially buy liquidated inventory. So here's what I mean by that. And right now, that is like the most profitable booming business right now. So let me sort of explain what that is. anytime, if you think of like a Target or a Walmart, right, during the 2020 COVID crisis, everybody ran into a crazy supply chain crisis, right? So if you are in procurement or something like that at one of those companies, it was very hard to get appropriate and accurate forecasting on inventorying data, or inventorying products. So what happened was a lot of these big box retailers like Walmart, Target, all of them, you could extend it all the way down the list, ordered far too much product. And the biggest issue is that not only did they order way too much product, the products that they ordered too much of, they didn't even come on time. So a lot of the holiday stuff came after the holidays. A lot of the barbecue and outdoor furniture equipment came after or right in the middle, smack dab during the summer, before everybody buys it, right? So they have a huge buildup in inventory. So what I hold on, I think we're getting a phone call. Apologize. So what I think you're going to see, we may be buffering. All right, we may be buffering for the next 5 minutes because this guy is going to keep calling me. So if you guys see buffering, it's just because this guy is going to relentlessly hammer me for maybe like 10 minutes, but then he'll give up. So anyway, essentially what I was saying is you're going to see, if you shop at Marshall's, if you shop at a place like Home Goods, any sort of discount retailer, you are going to be able to get amazing deals on patio furniture. Let's say if you shop at, online marketplaces for buying electronics, if you shop at online marketplaces for buying, let's say, refrigerators, you're going to be able to get that stuff half off at a minimum, at an absolute minimum. So to get back to the story, one of my friends that does a lot of private equity and VC investing is they are putting crazy amount of capital injections into companies that specifically buy, they're essentially liquidators, right? So they go to a Walmart, they go to a Target, and they buy all of their excess inventory, and then obviously mark it up a little bit because they buy it for pennies on the dollar. So those businesses are booming. So I think if you guys are in the market for a new refrigerator, kitchen appliances, furniture, patio furniture, just wait like maybe 6 months. Wait 4 to 6 months, trust me on this. This isn't investing advice, you're just buying a piece of furniture, you're buying a piece of, kitchen appliances. If it were me, just wait like 6 months. You're gonna get this stuff for like pennies on the dollar, and then we'll revisit this in 6 months on the stream and we'll check the prices. Go into a Marshall's, go into a Home Goods, go into a Ross Stores or something like that, and you are going to see not only inventory be so massive, but you're going to see prices be bargain, bottom of the barrel pricing. Dan says, hey Tom, you actually mentioned it a few streams ago about buying a lot of those things in the future because they are going to go on sale. Oh, I may have mentioned it before. And again, it's I may be wrong, but if that's sort of what I'm betting on. I think in the next 6 months you're going to see huge discounts on a lot of that stuff. Hey, Cayenne Pacific says, hey Tom and fellow Wall Streeters. Good to see you, welcome. Hopefully you're having a fantastic night wherever you are. The humidity is sort of broke, which is good in New York. It's not as humid as it was, so that's good news. But right now we are 34th Street, Herald Square, and we are going to head back uptown via Broadway. Yeah, maybe Costco too will have also discounts and things like that. Hey, the Austin Tennis Says, I miss Manhattan already. Good to see you, Austin Tennis. So the Austin Tennis is our former investment banker turned enterprise or turned software salesman. So hopefully everything is going good over at PagerDuty. Hey, E-Baby says it's a nice night, Tom. Good to see you. Lady O says, I'm happy it rained yesterday. My lawn needed watering. Yeah, you know, Lady O, it's interesting because in Miami, Florida, this is supposedly supposed to be our rainy season, right? But we've gotten essentially no rain. It may have rained for about an hour at night and then it stops, but very surprising. Hasn't been that rainy here. James says, I was at a local market today. I've never before seen the discount rack getting so much attention. It was kind of freaky, says James. So now we're looking at the One Vanderbilt building here. The Austin Tennis says, Tom, how's the quota attainment coming along this quarter? It's chugging along. You know, it could always be better. You know, it's funny. I used to have a sales manager that used to ask that exact same question. And no matter what answer you gave him, he'd be like, it could always be better, I guess. Which I guess is true for any salesperson. Even if you're at 150 to 200% of your quota, it could always be better. You could always be selling more, I guess. Hey, Carl Winston says, hey, Tom, how the good old New York City doing tonight? City's doing good, Carl. City's doing good. You know, I also want to note one thing. I think I mentioned this earlier on in the stream. Today was probably one of 5 days that I would say the city is probably back to 100%. So I was working on Park Avenue today, and today was absolutely packed. I would probably say, you know, if I had to guess occupancy, it seemed like today was probably one of those days where everybody was mandated to come into the office. So I'd say offices were probably 100% occupied today. It was really, really wild in the city. Hasn't felt that way in a long time, let's just say that, which is good, which I think is really good. So we're going to continue to be optimistic about that. Hey, Jose says, hey, Tom, with the economy, now, is it worth getting a New York real estate license with the economy? I mean, if you want to get into real estate, I guess any time's a good time, right? I don't know if economic conditions should put weighting on if you want to get a real estate license or not. It just comes down to, are you interested in real estate, right? Do you want to sell real estate? Do you want to sell residential, or what do you want to get into? Do you want to get into, you know, big M&A, merger and acquisition deals, or sort of what are you looking to do? So I think this is my favorite shot of the Empire State Building here. This is probably like a 9 out of 10. I mean, I don't think you can get much better than this. Yeah, NPC 007 says Costco's Kirkland brand is awesome. Yeah, I buy a lot of those products too. Hey, Sam is here. What's up, Sam? Says, Walks on Wall Street Tom. What's up? Long time no see. Sam, it is long time no see. Good to see you, my friend. So Sam is our neighbor to the north in Canada. Always a pleasure. Sam, we were just talking about Microsoft and Google's earnings report today. Cloud growth was pretty strong across the board, which is good. Obviously, the only sort of headwind is just the very, very strong US dollar, which is definitely not good, especially for a lot of multinational companies out there. But if we're talking about margins, you know, Microsoft actually guided higher on their profit margins for their cloud offerings. So just think about that. And I think this is why, you know, I've always had this hypothesis on why, you know, enterprise software and tech companies usually tend to trade at higher valuations in comparison to other sectors of the market, obviously because they tend to grow a lot faster. But you look at those margins, it's really insane. right? A lot of cybersecurity companies out there, or software as a service, you even look at Microsoft, you have 60 to 70%, sometimes 90% gross margins on your products. I mean, investors are willing to pay up for that type of quality. So I've always speculated that's why, you tend to see these very high growth, high beta software as a service SaaS stocks go through these crazy times of multiple expansion, right? Especially when interest rates are extremely low. You'll tend to have a period where multiples are on a PE basis can get into the hundreds, 100 PE ratio, 200 PE ratio, because these things are growing, they sort of grow on exponential growth trends, right? Their ARR, MRR expanding. And if you're selling a software product with 90% gross margins, people are willing to pay up for that quality. But usually a lot of that stuff tends to turn when the monetary environment turns, or when the interest rate environment turns. And obviously that is due to the discount rate. So investing is essentially just trying to evaluate a company's cash flows in the future, right? So what are earnings going to be worth in the future, right? So if I invest $10,000 today, I want to make sure I get a return on my investment, an ROI factored after inflation in 5 years. And when interest rates go up, those earnings in the future are now worth less in today's dollars. Those valuations have to come down. So a lot of people oftentimes will ask, why do interest rates, or why are tech companies very rate sensitive? And I think the number one reason as to why tech companies or software as a service companies are very interest rate sensitive is because a lot of those companies have earnings that are not in the present day. So a lot of them are either have very little earnings present and the vast majority of their earnings, let's say 3 or 4 years down the line. So if interest rates are zero right now, well then essentially it's a pretty good deal to buy the stock. But if interest rates are 3%, 4%, well now the value of those future earnings in today's dollars are worth less. So I think it's important to really sort of understand that correlation there. Let's see who's running for office. I don't think I've ever heard of these guys. Hey, Cosmo Scary. What's up, Cosmo? Welcome, man. Always a pleasure to see you. Cosmo is our Baruch Bearcat. Yeah, eBaby says everything is up, inflation is on a tear. Well, I mean, the good news about that, I think if you want to try to be a little bit optimistic, a lot of these commodities are sort of peaking and sort of topping. Obviously, I think the one thing that is not topping are some of the crazy stuff that we're seeing in the rental market, which makes up a big portion of CPI. But then again, I think you're going to reach a threshold. Oh, that guy almost got hit. I think you're going to reach a threshold of people that just physically can't afford to pay for rent anymore. There's only so much demand and only so much or so many people willing to pay, these $5,000 a month price tags for apartments. So I think you're going to have additional demand destruction there, but I think that's going to take a little bit longer to work its way through into the CPI numbers than, a lot of the, like crude oil has come down from 130, I think trading well under $100 a barrel now. So from an inflationary standpoint, I think a lot of the energy costs, at least all but short term, are probably going to go down. Can't say the same about Europe though. But I think that's a topic for another stream. Austin City Limits is be careful, yeah. Yeah, that guy almost got taken off. Yeah, MBA Elias says, Tom, I hope the excess inventory reaches the new and used car market soon. Local dealership only had 7 new cars for sale. Wow. Well, so MBA Elias, I'm not sure if you're on Twitter, but there's this really, really good person to follow. I think the Twitter name is Dealership. I'll go back tonight and retweet one of his tweets, but essentially he is an owner of a pretty large, I guess you could call them franchises or a chain of dealerships. So he'll actually provide a lot of real-time updates on the market environment for auto loans, the default rates and things like that, because I think in order for us to see a real big glut of inventory coming on the market, more specific to the used car market, I think you're going to need to see those default rates really, really spike, in which case repossessions will go up, which we may start to see that too. You know, a little bit of anecdotal data here. AT&T just reported earnings, and there was a very, very interesting sort of excerpt that they said on the AT&T earnings call. Does anybody know what that is? Did anybody hear what they said on the AT&T earnings call? Hey, Carol H is here. What's up, Carol? Good to see you. Carol, we actually just passed by your old place there at Herald Square. Hopefully you and your mom are doing well. It's a beautiful night out here in New York City. Not as humid as it was though, but again, I guess I'll reveal what they said on AT&T's earnings report. They said that consumers are now, we're just starting to see an uptick in consumers showing late payments on their cell phone bills. Now, many people, when you're talking about late payments on a cell phone bill, many people may say, well, that's not a big deal. That's not a big deal. Well, let me tell you why it's actually a pretty big deal. Because if you actually look at the data, and I think CB Insights actually published this piece of data 2 years ago, is that people will choose to pay their cell phone bill before virtually any other bill that they have. Okay, let me repeat that one more time. Consumers will pay their cell phone bill before virtually any other bill that they have, including their own mortgage on their house and rent. Which actually makes sense if you think about it, because nowadays you need a cell phone to pretty much do anything, right? To work, to stay in contact with people. So it was a little bit concerning on AT&T's earnings call that they are starting to see an uptick of people make late payments on their phone bill, because, you know, we could sort of take this as a leading indicator, and maybe it's nothing, right? Maybe it's just a one-off. It's very possible, but I think it's important to keep our eye on it, because if people are late on their cell phone payments, what else are they late on? Are they starting to be late on their mortgage? Are they starting to be late on their rent? What about their auto loans, right? So it's very important to watch these trends, because essentially what's going to bring down or continue to prop up the markets are the credit markets, right? And if you have, I would say, uncontrollable defaults, that's going to send shockwaves through the market. So just something to keep in mind. Something to keep in mind there. All right, everybody, check this out. So this is the view directly under the Bank of America Tower here on 42nd Street and Avenue of the Americas. And you could actually see the Salesforce Tower too, ticker symbol CRM. And then right here is the H&M building. Yeah, British Gray, you're right, it says N credit card. British Gray, good to see you. Austin City Limits says we can't do without smartphones. Yeah, I think it's one of those things. It's almost like a lifeline. Austin City Limits is like, this must be Tom's apartment. Yeah, I wish. Emmanuel says repo market has been exploding for weeks. Emmanuel, good to see you. Sunshine after rain. Yeah, isn't it beautiful? Really, really beautiful here. You know, so here's an interesting thing. I know we're getting a little bit off topic, but we're already streaming for 2 hours. I said I was only going to stream for an hour and a half. So hear me out on this. What do you guys think about this? I was just thinking about this the other day, and I sort of want the group's feedback here. So as you know, I now work, 50-50 between Miami and New York. I've pretty much worked in the city throughout the entire pandemic. I've seen the city a complete ghost town with not a person in it, and I've seen the city on days like today where it's, going gangbusters, people all over the place, everybody's in the office. So I've seen both things. But here's a trend that I noticed that's interesting. I think that you saw places like Miami, Florida, Fort Lauderdale, parts of Texas, more notably like Austin, Dallas. You could talk about Denver, Colorado. You saw all of those places, right? And there's many others that I could name, but I just can't really get it off the top of my head now. You saw all of those places that had more laxed, let's just say requirements, things like that for COVID, all recover sooner than a city like New York, maybe San Francisco. I can't speak for San Francisco because I don't live there. But here's what I think is going to happen. I think you're going to see a slowdown in markets like Denver, in markets like Austin, in markets like Miami, and you are going to see a boom in places like New York City, maybe Boston. And the reason why I say that is not because one city is better than the other. It's just because I think New York has not yet had its COVID return boom like some of those other cities had. So New York is more of like a lagging indicator. So if we really go into a recession, right, and we could debate this ad nauseum back and forth on the stream, but if we do go into a recession, I think that the New York market will be like the last blow off top. If you guys are familiar with sort of like market mechanics, Elliott wave, like Wyckoff stuff, New York will sort of be like the last hoorah blow off top, because we've seen rents skyrocket across the board in Texas. We've seen rents skyrocket, go gangbusters, rip faces off in places like Denver and Miami, Fort Lauderdale. And now you're just starting to see those face-ripping prices happen here in New York City. The average rent for a place in New York City is $5,000. Even though that's a little bit misleading, almost every single friend that I have that lives in the city has gotten at least a 20% rent hike, right? So as everybody starts to return to the city, as everybody starts to return to work, you're going to see the economic blow-off potentially happen in New York because they just haven't had theirs yet. And then I think we'll get that negative GDP print later this month, in which case it'll forecast a recession. But just as an observation, I go into the office in Miami, the office is packed. I can't even get a spot at the WeWork. But in New York, over the past couple months, things are just starting to come back, which is good. But I think just based upon policy, based upon just local laws at the municipal level, I think New York is now going to have its moment as a huge economic wave takes over, which is good, but I think that may signal the end. I think those markets have been a little bit distorted, but what do you guys think about that? Have you guys been seeing the same thing in your city, right? Because I think I've been getting a good grasp on it as I've been traveling between Southern Florida and New York, and I could say that New York now has the same sort of energy and vibe around it as Southern Florida had, during early 2021 when everybody was trying to get out of town. That's sort of what I'm seeing. Dan Zhang says that means rent is probably going to go up even higher if New York is still not fully recovered from COVID. So that's what I'm thinking. But I think maybe in 2 years it's probably going to come down drastically, which is good. Because if you think about it, so I think we're going to have an entire stream dedicated to rental real estate. Because one of the things that you have to look for when talking about real estate, more specifically multifamily in the rental market, is the renewal rates, right? And we'll sort of go into what that means a little bit later, but I want to show you guys an interesting trend of what I'm seeing in the rental renewal rates here. Yogi says Los Angeles wants to bring back the masks. Jimenez says the US just has very violent people. E-Baby says New York, the noise never stops, agreed. Hey, Dr. Longus is here, what's up? Says maybe or New York City will not be the same pre-COVID. People are working remotely and can live cheaper. So that's actually an interesting proposition there. So I'm gonna say, I'll say one more thing and then we gotta wrap up the stream, everybody, because we're running on the 2-hour mark. Here's what I think. So I have a friend at Salesforce, and there's talks at Salesforce that there's going to be a new policy of a work anywhere policy for a month. Many of my friends at different hedge funds, they're having this policy too, where you could actually choose 1 month out of the year to work wherever you want, right? So I actually think this is going to be very, very lucrative for people who run STRs or short-term rentals. And I think you could actually make a business. So I'll give you guys a free business idea if anybody wants to jump on this. You could actually start to acquire real estate, but tailor that house to look and feel like an office sort of sanctuary place, right? So hear me out on this. Let's say if you live in a place like New York City or Florida, Miami, a place where a lot of tourists tend to visit. So let's say if you work for a big software company in Texas and you've never been to New York and you want to have your company pay for you to work remotely in New York City for 1 month. You know, you could actually market a business catered towards those people, but in your apartment or in your Airbnb or whatever you want to make it or whatever you want to call it, you know, have really nice desks, have quiet spaces, maybe soundproof those rooms, and you can market it to those individuals at those particular investment banks, software companies that are able to work remotely for 1 month. Right, you could probably charge $2,300 a month for a person to have a complete office space, a place to sleep, soundproof, high-speed internet, and you could actually probably make a nice small business out of it. So if anybody wants to jump on that idea, feel free. But everybody, we are going to wrap up the stream here. Hopefully you guys enjoyed the earnings recap of Microsoft and Google. We will be back live on Thursday night. So we will not be streaming tomorrow. We will be streaming Thursday night, 8:30 p.m. Eastern Standard Time. So if you enjoyed the stream, feel free to leave a like on this video. Subscribe to the channel if you are new. Hit the subscribe button. And we will be back 8:30 Eastern Standard Time live from New York City on Thursday night. So thank you for joining. MBA Elias, thank you so much. Marcos, appreciate it. Wendy England. Diana Martinez, thank you so much for joining. Christian Wilson, thank you. Bagels and Walks, appreciate it. Jimenez, thank you so much. Cayenne Pacific, MBA Elias. Dusty Cole, Freezer, James, Dan Zhang, much appreciate you joining. Sunshine After Rain, Ruby Falcone, Dr. Longest, Kurt Flirt, Sherry G. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. And you just need to know where to look. Carol H, appreciate it. See everybody right back here Thursday, 8:30 p.m. New York City.